Well, let's continue on that with analysis live to Washington and Mark Bloomfield, president of the American Council for Capital Formation, a free market and business-sponsored economic think tank. Welcome to World News Today. These figures are much worse than anyone was expecting. We heard there from the president. We also heard a few weeks ago from Tim Geithner, the US Treasury Secretary. He said this is about government now, and government must not relent. What must the Obama administration now do urgently?
I don't think it's only about government. I think the stock market, 25% down from January, reflects the business community and the investors' community judgment about where the economy is and what government's role or government's attempted role has been so far. And it's not a pretty sight.
Well, what must they do now? Here in Britain, the governor of the Bank of England said on Thursday they're going to start printing money. Are we one step from Ben Bernanke throwing dollars out of helicopters, as he once said might have to happen?
Unfortunately, in the long term, we may be headed in that direction. That is one thing that concerns me about the president's budget. He's talking about a 3% deficit 10 years out. We should aim for a budget surplus. But there are three things that are at stake here. The first is confidence. Unless the investing community or the average middle-class American has confidence in what's going on, we're in trouble. And that confidence is lost. It's very hard to get back. I think the president should be temperate in his comments. I think he should be more attuned to the views of the business community, including those people who've seen their nest egg drop. So confidence is something that is very hard to restore, but that has to be a focus. The second thing is we have to fix our financial institutions. Secretary Geithner's plan to some has seemed a bit confusing, but until our financial institutions work, you can't get credit, you can't get money out there to businesses to start rebuilding and to consumers to send their kids to college and hold on to their homes. And then finally, we've got a good old-fashioned recession, a deep recession worldwide. And I commend the president for what he's done in terms of fiscal policy. I also think he has the ability to restore Americans' faith in the free market. But unfortunately, I would differ with him that it's government that's going to solve this problem. No, it's going to be business investment, private investment, the private sector that's going to restore the American economy.
Let me, Mark, ask you to link together what's happening in America and what's happening in China at the moment. China has been a big investor in America based on the enormous cash flow because of the success of America. How much of this is now all unbundling? We were reporting from southern China, from Guangzhou a few moments ago.
It is certainly unbundling, and that, of course, is one of the real tragedies of the situation. Why is it unbundling? Because the Chinese and other foreigners are financing our debt. And they're financing our debt with money they're getting from exports to the United States. The American economy is slowing down. Those exports aren't being done, and the Chinese are not going to have the money to finance our government. And what that illustrates is this is not just an American problem. There are imbalances in the world. What is happening in Europe, and my wife is European, so I chide her for that, and the Chinese, they have to rebuild their economies so they have domestic demand as well as savings. They save too much. They don't consume enough. They're depending on us. It's a global problem. We've got to do steps. That's why their stimulus package is important, and that's why our long-term concern about the deficit that the president alluded to but has not done enough about needs to be heeded.
Mark Bloomfield, thanks very much indeed for joining us from American Council for Capital Formation. Thanks for joining us live from Washington.